Good evening and welcome back to Be Rich. My good friend and nephew Sashwath is here and he wanted to ask me some basic questions from a book which I consider a Bible for all investors. This book was written in the late 1950s by Benjamin Graham for people who found security analysis very difficult. We are going to summarize the first chapter, but more than summarize, we are going to discuss my life's experiences with the first chapter. So he had some questions. This was a conversation I had with him, and he thought you guys would find it interesting. We are going to discuss this. Go ahead, Sashwath.
Okay. So, first off, I want to just go over the fundamentals of the chapter itself. So, the fundamental idea in the chapter is to distinguish between investment and speculation. And you had done a series in your Money Page channel, that is your Tamil channel, on the chapter 1. So, I don't want to spend too much time on it, but if you could quickly give a brief on how do you accurately distinguish between the two.
It is basically a question of how much risk you are willing to take. Investment is an operation. It's a very famous definition. I'm not going to repeat the definition.
Okay.
So, investment is an operation for where I'm compensated for the amount of risk I take. So, if you look at Howard Marks, a modern day great, he says any asset, there's a price at which it becomes a value buy.
Yeah.
So, for the amount of risk I take, do I get the compensation? And there is the safety of capital he talks about.
Yeah.
And the safety of capital is assured and I get an acceptable risk.
This is investing.
This is investing.
Okay.
Speculation is I put in my money to work for a quick turn. I see an opportunity in the market. I land a punch and I quickly get in and get out. So this is speculation. Speculation is not scientific. It's a bit like gambling. There are some highly intelligent speculators. Soros, the great Soros. And there are times when investors turn speculators, but they are assured of the results. This in a later chapter is discussed as special issues.
Special issues.
Like Activation Blizzard is going to be acquired by Microsoft and there's a big gap between prices.
Yeah.
Nearly 10% gap. Buffett has already bought 10% of Activation Blizzard, hoping that he can just pass it on to Microsoft and make that 10%.
Yeah.
So this is called a special situation. There are times when you can, like there was an accusation on Pinish Murthy on Infosys, saying that he was corrupt and people tried to short that stock. The stock became 600. It was highly undervalued.
We got coffee at Sangeeta and then you had said that, Sashwath, go buy stocks.
Yeah. So if you had bought it at 660 and sold it for 1,000, it was still speculation because you exploited an opportunity. But
so that would be speculation.
That would be speculation.
Okay.
But we knew Infosys was a good buy. We know that the macroeconomic headwinds would mean that Infosys will continue to go up. So you decided to hold on to Infosys. You didn't even sell it at 1,800, which was a fancy price.
We didn't.
And it's still now trading at 1,500, 400, but still up.
We're in it for the long haul.
So, and you collected 2 dividends. So you have decided to become an investor. But you could have easily exited at
1,800.
1,000 rupees and been a speculator.
Yeah.
So this is the primary difference between an investment strategy and a speculation strategy. And this is an interesting, honest speculator who knows something. But most of the time the speculators have no idea. They just jump into the stock market, especially on leverage, and a big no-no, and they lose everything. There is another great investor called Phil Kerry, who was born in 1900 and died in 2000. He spent 80 years in the market, pretty much like Charlie. Charlie has not spent so much time. He's 70 years because he came to the market late.
Yeah.
But what Phil Kerry has said, in all his 80 years, he has not seen anybody who has made consistent money on leverage.
So, with that, I want to get into the crux of this video, which is to look at your opinion on certain scenarios which are quite topical. So you had already touched upon Activision Blizzard, which sort of sums up one of the scenarios I came up with. So let's say in this scenario, so I'm going to propose 2 scenarios to you. You tell me, is it more speculation or more investing? So scenario 1, we expect a huge merger or an acquisition, and you take a position in the smaller company because you expect an arbitrage in the pricing. That is, you buy for a cheaper price and then you hope for the acquirer to come in and buy from you.
See, if you know for sure that the acquirer has already announced the deal, then it's investment. But if you are hoping for an acquisition and entering it, it is a speculation.
So this reminds me of a scenario we had in the 2020 pandemic when you were doing your Q&As on your Tamil channel. The one big event which was happening was Vedanta had announced that they were going to take their shares private.
Yeah. So if they had, I would have tendered my shares.
And they said $90 a pop or something.
No, they said 300 rupees they will.
Yeah.
The share was in double digits and they promised to buy it back at 300. Nobody bit that bait because it was highly undervalued. The problem in Vedanta is the amount of debt it had. So, and there was some excess cash flow in the Indian subsidiary. So, if it's a private company, he can get unfettered access to the cash flow. Unfortunately for him and fortunately for retail investors, the deal didn't go through.
So it was a mistake.
No, I wouldn't have. He was too greedy.
Yeah. Okay, so moving on to our scenario 2. So this is something which we've been through and which everyone asks us about as well. So does waiting to catch a falling knife, that is waiting to catch falling prices, whereas you see the market is falling and you see deals are getting better, do you wait? Is waiting considered an act of speculation? Or as an investor, as you always tell me, buy some, keep buying in very little amounts, tiffin, coffee, whatever the small amounts are, and you keep staying in the market, regardless of how much you expect the price to slide by. Because I specifically remember in 2020 when the market was at 7,000, I had sat and said, I think prices will go down further because we had discussed how macroeconomic conditions were looking pretty bad. But none of us could tell that the Fed was going to print so much. So I had lost out on a golden opportunity that way.
No, you bought some.
I bought some, but I should have bought, which you told me to buy more. You said be more aggressive. So what do you think this? Is this speculation or is this considered investing?
See, it is considered investing. Nobody can know the exact bottom. And the way the Fed is fixing the game today, the amount of time spent in the bottom is also very less.
Right.
And the market is now used to and is expecting that the Fed will bail out every time there's a problem. Even today, as we speak, there's a rally in the market, hoping that the Fed did not increase rates as much they thought they would. And in the futures market, we are discussing it later, but in another video, but this commodities have crashed. All this is leading a signal saying everything is hunky donkey. Please don't raise the interest rates. Don't stop the
Party.
Don't take the punch bowl.
Yeah.
But the Fed will be forced to take the punch bowl out.
Okay. And so this is something which we both agree on, but I want to pose an opposing question to your Bitcoin stance. So you've said in multiple interviews and multiple places, and you stand by this saying that you believe in the power of blockchain and you believe in the brilliant technology behind Bitcoin. But you also say that you don't believe in what it's manifested into, which is Bitcoin and other cryptocurrencies. So if you don't think that these are investing opportunities where you can get behind the technology, how do you suggest that investors get behind a certain technology which they find pretty revolutionary?
You have to find out companies which are doing work on blockchain and system people who are willing to adopt blockchain. Blockchain is a very disruptive technology. You will not need a stock exchange at all.
Yeah.
And you won't need brokers at all.
And everything's public.
Everything is public.
Yeah.
See, why do you need a broker stock exchange today? Is a principle of innovation that exchange guarantees that once I pay money, I will get the stock.
So it facilitates.
Or if the exchange also says, if I deliver the stock, I get the money.
Right.
But if I can see the opposite size books and he can see my books and we can have an escrow transaction technology, then I don't need the stock exchange.
And that's what the miners do.
So that is what blockchain technology is all about. The very simplistic thing.
Right.
So lending money and deposit, the friction, the role for an intermediary comes down. That is why blockchain is important.
So that's why you get behind it. In terms of the technology alone.
In the terms of technology alone.
Right.
If there is a particular stock, the entire history of that stock will be known.
In the blockchain.
In the blockchain. Who has held it from day one till today.
Yeah.
So that kind of advantage is there in blockchain. But it will take time to get adopted and come to the...
So as I see it, you are a proponent of information symmetry. Rather than blockchain itself as being a technological marvelous thing, you think it brings information symmetry to the table. And as an economist, you find that to be the most efficient way?
I'm not an economist.
Student of economics.
As a student of economics,
Yeah.
I find that information should be freely available to all. You cannot have asymmetric information, and you cannot have imperfect understanding. But most of these markets is all about imperfect understanding.
Right. And you make your money off of imperfect understanding. Although you think it should be
It
done
should
away
be
with.
open to everybody, and
Yeah.
you can decide whether you want to be imperfect or not.
And so I want to quickly go over these last two questions. One, what are some examples where speculation can be disguised as investing? One would do.
There have been a lot of times. There was a fad on crypto. Narratives economics.
Yeah.
The biggest narrative I've seen in recent times is crypto is.
So crypto is an example.
You were not even born.
Yeah.
Very difficult to note that. The dot-com bubble.
2001.
2001. You were 2 or 3 years old in
2003, 2004, 5.
2004, 5.
Yeah.
2008 when it burst, you were 5 years old.
Yeah.
When there was a housing collapse, bubble collapse.
Yeah.
So these were things which we knew were happening. We could see it happening. And if you can, which I'm certain you will do one of these days, you can take back and look at my old writings, which will reflect this.
Right. And I think this is sort of a subsection of the last one. So what are some false stock market ideas which floated around during your time as an investor?
IFCI. The story of IFCI, how wonderfully the government is going to privatize of IFCI and how somebody is going to buy. Yet that stock which was worth for 50, not even worth 20 rupees, went up to 90 or 100 rupees. That I saw. Then I saw the craze on Kingfisher Global. Kingfisher, an airline which I knew was bankrupt. Then I saw the craze on R Power.
So you had realized when there was a craze that this company is...
Yes.
Okay.
I've written in my book also.
Right.
And then Reliance Power is another craze I saw. Then I saw Suzlon, which is wind energy is going to solve all problems.
Right.
Like today's EV.
Not with debt though.
Not with debt. So this is really, all these are victims of debt.
Yeah.
Then there was an infrastructure company, which was the next L&T, that was Punjaloid. I can keep on going. Every bull market has some names.
Right.
If you go back in time machine to 2004 to 2008, the names which I talked about are going to be the names. When I was your age or slightly older than you, there was a Harshad Mehta bubble.
Okay.
And there was a company called Karnataka Ball Bearings, where the company was locked. The company was not, it was then locked and key.
Okay.
Nobody at the company was not even functioning.
Oh, the office was locked.
The factory was locked.
Okay.
The company was non-functional. The shares went up too much.
So it was completely on paper. Right.
There's another company called Mazda Leasing. These were all stocks.
Yeah.
Just pumped up by Harshad Mehta.
Okay. And I think that concludes our discussion for this video.
Yeah. So this is what it is. These are the things which I have seen in my life.
Thank you for answering my question.
My pleasure. Thank you for watching Be Rich. If you like this video, kindly hit the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.